This is Zachary, and you can see here we're looking at the US dollar yen on the weekly time frame. In the review video for this upcoming week, we did discuss the potential for a head and shoulders pattern continuation on the dollar. We're going to go ahead here real quick and check out the dollar index. Before we zoom in real quick, trading involves risk, so be certain to just hold yourself accountable to any actions that you take in the markets and beyond. Now, we are on the weekly, keep that in mind, but we did draw out this series of trend lines, identified this area to the downside. We're talking 91.7. We'll go ahead, we'll add a price line and just really finalize that target. And we are going to say this is the December 15th, 2017 target. And we'll make that solid. We will show the name, show the price, and we'll leave it as white for now. This is TD Ameritrade's Think or Swim platform. It looks a little bit different than TradingView. It gives you access to an additional option or two when it comes to your charting. And, coming into the daily, we can see that we are trading into this area of demand, or area of supply. Demand is to the downside, and see, even when I stumble in a moment like that, pay attention to this, make a note of it. An area of supply and areas of demand, these zones, they shift, they change, they are interchangeable as price moves. And when I'm saying this to you, the common trading terminology is support and resistance. But does that help you understand why price moves? The TradeHouse simplifies this for you, so be sure to subscribe to our social channels. And, I do thank you for your time. So let's get into the intraday. Let's see what happened. We're hitting our 200 exponential moving average, and we are slowing down on what's actually happening. We could likely even make this area a little bit smaller and still have it be accurate. We're going to leave the upside just because that 38.2 Fibonacci. However, I'm still personally anticipating on the dollar a move back down towards these levels. So we'll leave that on there too. Let's go over to the US dollar Japanese yen. We can see that we had an area of consolidation occur between literally the afternoon on the 17th. Looking forward to right here, New York session, we had some bullish action, and really even with this candle, how it closed, bouncing off of our potential price our price line. This was a very nice trade. You could have entered anywhere hypothetically within all of this consolidation range between Sunday, Monday. You had, let's say, 36 hours to identify this setup, and potential for, at this moment, 54 pips. Risk on that would have been closer to 20. So more than a 2-to-1 setup like that, couple of hours below the moving average, looking about, with this area right here, with what's going on over here, we are going to have to keep our eye on this. Let's check out the daily candlestick real quick. Now, it didn't engulf this, which is good. Looking towards our historical data, let's just see. Put a rectangle, and you tell me, what would this area be? If you are successful in, contacting ZX Zachary and saying what this green area, in your opinion, is right now, you win. You know, you win. Take a look at the monthly. We did have that rejection. Coming on to still looking at lower movement. I'm going to say 111.5. I mean, that would be an ideal first target. We'll say 111.6. So I mean, from where price is trading right now, we will hop back over there. Show the price, show the name. That's where we're looking at. Let's come back to the hourly. And I mean, while that may be a good first target, it doesn't necessarily mean that price is going to, you know, push through this in an aggressive way. There is still potential for this to go up, of course, but if you were to take a trade right now, just entering the sell, you'd be looking at a potential drawdown of, I would say, greater than 30 pips. Like anywhere from 32 to 40 pips stop on this, you could be good. Ideally, if we see something like a quick movement up towards this 112.8 or even the 112.9 level, you know, 25 pips to the upside, you could look to enter the sell, bring that down, really lower your level of risk on this happening. And I do want to look at the USDCAD here really quickly. So, you know, again, following what we are anticipating, that initial movement up to start the week, we'll see what happens. Still looking towards more downside movement. No major fundamentals coming up until, you know, Friday. There is some news that will influence this. We also have Fed Chair Yellen, you know, speaking on Wednesday with the FOMC. And right here, I mean, 125, this is like target one from a swing trader's perspective of where I believe price is going to go on the USDCAD before the 2017 year comes to a conclusion. We could close around the 125, 124 price. Of course, there is still that downside potential, but we'll really just have to see. This is ZX Zachary. You know, find me online. And I thank you once again. Safe and happy trading. Oh, by the way, did you know you can trade BTC USD? You know, Bitcoin 24/7 now? Ask me how, or just check out the description and you'll find a link in the comments.